Welcome everyone. My name is Mike Hamilton from Trade the Easy Way. Welcome to YouTube viewers and the group members. And let's just start with just looking at some Dow 30 stocks. So as I've left it on this, might as well have a look at this while I've got this lined up. This is Goldman Sachs. So we saw a deep retracement in third week in January. I think that was results, and we popped up from that. So a very nice chart pattern down here from that high in August and these lows in December and January. And now we look as if we're getting back to 22 highs. Actually, 22 highs are back here, aren't they? No, they're not. 22 highs are back here at this 39 area. So this is a good bellwether. If the Goldmans can hold up, then that stands the rest of them in good stead. Apple, very nice move up from this 125 to close to 160. So the market at the moment seems quite happy. Of course, any turnaround in this congested area above us could see Apple come off. And so let's just have a look at the UK indices. Call up the FTSE. I have taken a short at these all-time highs, but I'm using very low leverage and a tight stop. So the reason is because we do have this 3 touch of this resistant high. I'm not in the business of trying to trade tops and bottoms. I am just happy to take a small trade and almost a market lot under that resistance. So I'm literally, this is about my entry point here, just at the 95.53 area on the FTSE. My stop is just very tight, just above it, literally about 20 pips above it. Half size I will add if we close underneath here. So it's a marker lot, it's not a full lot. I'm not trying to pick up, I'm not suggesting this is the high, because I'm at the moment I'm wrong. The FTSE is proving me wrong. I expected this to close. I was looking for this to close lower on the Friday, which we did, but we didn't close underneath support. We held support. So at the moment, I am wrong about the FTSE, but it is precarious. It is coming up on lower volume. There are several reasons why I still think this is shortable. We come up on low volume. You've got this extension resistance up there, which fits in with my 2022 level analysis. As because if we stay underneath this resistance level, then this is going to pan out. All the time but obviously if we make another new high, I'm out of the trade and I will stand aside. Reversals are very profitable but lower probability. So I trade much lower size, much lower leverage, and tight stops. But if they work, I will add. All right. So in the meantime, the FTSE is at a resistance point. It's at an extension, but it is not showing a sell signal. Hence the reason why I'm going in very light-footed, etc. Let's take a look at the DAX. Come on. It's not showing up my... Oh, there we go. Yeah, this 250, this held this all week last week. So if it's a widening triangle, then we could potentially go right up to that 16K at this rate. where are we in relation to last year? Let me have a look. Right, so last year's highs was 16,300 in the very start of the year, and then subsequent highs sold all into last year, and here we are making a comeback after this push up from September. So it is on this DAX. This is a one to potential just a three-wave corrective wave at the moment into this resistance area. But like I said, all the time we hold this low here, we held it all last week. All the time we hold this, we could get back underneath, could come and attack that 16K mark. And we are 15,400 at the moment. All right, so those of you just joined us, you've not missed much. I've only just started, so hold on. Okay, so at the moment there is no reason to get heavily short, well, no reason to short this market at the moment. Obviously, we had a pin bar lower close there on Thursday. So if all we're going to do is come into that resistance and just retest these Thursday highs, close lower, then we do need to get, I need to get short this market as well. All right, so there is, this market's had a good run from the early autumn. We survived a dip into the back end of the year, and we've come out into January all guns blazing at the moment. But there are some weak signs. There are divergences up here. In fact, let's go back to that FTSE a second. Let's just put the MACD on. Take that off. Right, so we've got volume and MACD on there, and you can see we are very divergent. This FTSE is made a new all-time high, and the averages are struggling to cross. This is a standard MACD. This is not a fast. No, I have not accelerated this. It is potentially closing higher, but that is a potential sign, a potential reversal sign if a market comes up with that level of divergence. Okay, so let's look at the Dow. So the Dow has been a lagger. We've got US inflation tomorrow. We've got UK jobs and US inflation. So it's a big day tomorrow. At the moment, the Dow is heading back to 23 highs. So we're literally 150 odd, 120, 130 pips off of the 23 highs. So if this is going to sustain this, we need to close above this congested area here. And we need to see that break through that resistance and go back to over 35,000. Now, the options expiry on Friday in the US. That's crucial because it tends to be a reset in the market. So if you tend to get a little bit more volatility in the run-up to options. So if we can't get through, if we stay in this very tight range on the Dow, a tight range at the very least, if this is still bullish, a tight range means it needs a decent pullback. A decent trend line pullback would be down there at 33,000, 33,350. All right, so if we do pull back and if we can't break new highs and get up to 35K as we get to expiry, then expect a deeper pullback. If that fails, then this is going to roll over. All the time we are sitting up here, if I put a 20-day average up here, any market that can hold the 20-day average is buyable on dips, and this market was under the 20-day average at times last week, but overall held it. So again, this is not shortable. This market is not shortable all the time we sit up in this region. It is shortable if we close underneath the 700. Quick look at the Nasdaq. It's a good start to the week. You can see we literally just tested the 20-day average at the low. So again, if we come back to this 12,800 and can't break higher, then it is shortable. At the moment, we've got a very bullish pattern up here. We had a big push up, pull back to the trend line, a few pullbacks on the way up to that. We just pull back to the 20-day average. So if this holds, and we can close, and we can still close out of that resistance, then we could go and see 13, 13 and a half. So the bellwethers are holding up. These indexes are holding up. The volatility index. So we saw this push up last week and hit resistance, and now that's rolling over. This is relevant. It is a measure of fear. It's the fear gauge. If this breaks up and really powers up, that's marking the fear in the market. If this sells at resistance, it's just like any other market. If it sells at resistance and rolls over, then fear is receding and the markets are viable. Dollar. The dollar has had a pickup from this June 2022 lows. So it's picked up just ahead of inflation. And we've gone right to that trend line. I think the dollar will break up. I think we'll see further upside, whether or not we'll see a real continuation. The gold has really struggled recently. It's had a very, very deep pullback, and it's this strength in the dollar. The dollar and gold are, in a normal environment, divergent. So if the dollar's up, the gold will pull right back because it's traded in dollars. Patrick, you want to train again? It's been recorded, so I'll make sure you get a copy of that. Okay, so let's have a look at oil. Oil continues from this January low and this December support. Oil continues, all these dips in oil continue to get bought. I haven't traded oil today, unfortunately. I was waiting for a deeper pullback, and so it's a shame because this is a nice little run. So if we've got inflation tomorrow, so if this 79 holds tomorrow, we could come and find 82.5 and potentially 85. Excuse me. We are not divergent. This MACD is behaving as you'd expect in a uptrend. The volumes are picking up, so the oil looks as if that's got momentum to push through 85 at the moment. Right, so let's have a look at some stocks. I want to look at, talked about this one last week. Where's it gone? Is it BLX? VLX pulled back into this December support. The volume is beginning to pick up, so I like this stock. Bear with me one moment. It's a very defensive stock. So I think if that holds and we close above the 250 mark, I think that could go and find £283. It's not a complete buy signal. This is if the fact we've not closed above 250 means this is still vulnerable. But I think we've got to the stage where it looks as if it's proving itself now. And I think that there is the potential. I would buy the 240 here with a stop under 235. And if that gets stopped out, then I will just completely walk away and leave it. But I think that is viable, this VLX. It's in the defense industry. The other stock I've got for you tonight is this one. Rather than do, I've done a broad sweep of the market. I'll talk to you about what I'm seeing overall in a minute. Where's it gone? Right, let me just call it up. Chemring, this is another defensive stock. I like the volumes are picking up. The price is coming off of this 270, 275. I think this is viable. If this does well, I can see this going back to £354 potentially, if I'm right. So this is Chemring. So if that holds, as long as we don't go underneath 270, I think that's viable. So I think the pullback is 280, 285. Obviously try and bid on 280 and see if that works. So you can get, if you wait for pullback, keep your stop underneath this area here and then see if we can continue higher and the volume can pick up. It's not divergent because we didn't make a new low down there. So the fact the MACD is turning higher is not a true divergence, but it does illustrate to me that there is momentum on the upside. So I think this, so I think Chemring and VLX are great stocks. In the meantime, the miners are struggling. The housing stocks are getting hit. So this Taylor Woodrow had a move right into that 126. This now looks as if this could fall right back to me. I think that is lower. So housing is taking a hit. The defensive stocks are holding up. The IT stocks are struggling. Miners are struggling. Look at healthcare. Laxo. I think Glaxo is all right. If that gets back to 1430, I think Glaxo is a good buy. I would wait for a pullback. I wouldn't buy that at these heights. I would wait for that to dip. BLI, no. Medtronic, I talked about this one ages ago. I called this at 75, 78. That looks higher still. So we've recently seen 87, 88. This is a very good support area. The volumes are healthy. I think we could, if I'm right, this should, we've got a gap up there. I think this gap up here from May 22 could get filled. But let me mark that so I don't forget that. Look at the volume coming into this Medtronic. This is a good lot of volume. It's a US stock, US healthcare. Right, okay, that's me done. So look, so the gold, I didn't look at the gold, did we? The gold is really, really falling out of favor. And that is looking like that wants to see 1840 at this rate. So we've got US inflation tomorrow, and this is just not doing it at the moment. We could come all the way back to 1820, 1830 at this rate. Who knows? Maybe even go under 18. Hence the reason why the miners are really struggling. Brilliant. All right, that's it for the freebie. I will send you a recording for that, and look forward to seeing you next Monday. Any quick questions? No. All right, thanks very much, guys, and see you again soon. Bye.